A global bond tantrum is shaking the financial landscape as we dive into 2025. The message is clear. Brace yourselves for a new normal in borrowing costs. US government bond yields are surging, with the 10-year notes nearing that elusive 5% mark, a level we haven't seen since before the financial crisis. What's fueling this? A robust economy, evidenced by a stellar employment report, and a Federal Reserve that's rethinking its playbook on interest rates. Now you might be wondering, what does this mean for you? Well, if you're looking to borrow, whether for a home or a business, expect to pay more. Mortgage rates are creeping back up to around 7%, and that's sending ripples through the stock market, where investors are starting to sweat over the impact of these rising yields. Historically, surging bond yields have been precursors to economic turmoil. Remember the dot-com bubble? The global financial crisis? Yeah, those were signaled by similar spikes. And while some see this as a natural adjustment after years of ultra-low rates, others are sounding the alarm bells. But it's not just about the US. This trend is global. Britain, Japan, you name it. Investors are getting skittish about debt. The term bond vigilantes is making a comeback, referring to those investors who push back against government fiscal policies by selling bonds. With a budget shortfall projected to exceed 6% of GDP in 2025, and with Trump back in the White House, we could be looking at even bigger deficits and inflationary pressures. Keep an eye on the bond market for telltale signs of what's to come. Understanding these dynamics to making informed financial decisions in the months ahead.